Okay, let's unpack this. That phone call, you know the one.
Oh, yeah. Interrupting dinner.
Exactly. Or it pops up as an email, maybe even a text message, always, about your car's extended warranty.
It's become this almost constant background noise, hasn't it? Kind of a running joke.
It really has, a symbol of those pushy sales tactics.
Yeah.
But, if you peel back the annoyance, there's a really serious question there for car owners all over the U.S.
For sure. Are these extended warranties or, well, vehicle service contracts, as they're actually called?
Right, the VSCs.
Are they actually smart financial protection, against those repairs that can just destroy your budget?
Or are they just like an expensive gamble? Something that helps the company selling it way more than it helps you.
That's the core of it. And you've brought a great set of sources for us to dig into here.
Yeah, we've got some really valuable stuff. Candid insights from Reddit, people actually working in car sales, service department.
Real frontline perspectives.
Totally. And then we've got these analytical articles breaking down the costs, the different types of coverage, and that really crucial difference between these contracts and actual insurance.
Which is a huge point of confusion.
Absolutely. So our mission today is to kind of synthesize all of this, cut through the noise, pull out the essential facts, the different viewpoints from these sources.
And really help you figure out what matters most for your situation, for your decision.
Because it's definitely not a simple yes or no answer, is it?
Not at all. It really depends. You have to understand the landscape first.
Okay, so before we even get into the pros and cons, we absolutely need to get the terms straight.
Definitely. Step one. Because the language here is often confusing, sometimes maybe intentionally so.
We hear warranty thrown around constantly. Let's start there. What is a manufacturer's warranty, actually?
Okay, so think of the manufacturer's warranty like the original promise that comes with the car from the maker.
Built into the price when you buy new?
Exactly. It's included. And it's their guarantee against defects, problems with materials or how it was put together.
So if something breaks because it wasn't made right?
Then the manufacturer covers the repair.
Mm-hmm.
But only for a set period like 3 years or 36,000 miles typically, whichever comes first.
And sometimes if you buy a used car that's still pretty new, it might still have some of that coverage left, right?
Yeah, if it hasn't hit those time or mileage limits yet. It's tied to the car, not the owner initially.
Okay. And the sources were clear about what it doesn't cover, which is just as important.
Oh, absolutely. It's not a maintenance plan. Don't expect it to pay for your oil changes, tire rotation, stuff like that.
Routine upkeep is on you.
Right. And it also excludes parts that just wear out normally. Think brake pads, clutches, tires.
Things you expect to replace eventually.
Exactly. And it definitely won't cover damage from, say, an accident, or if you misuse the car, neglect it.
Like forgetting those oil changes we mentioned.
That's a big one. Or damage from floods, fires, external stuff.
Got it. So it's really about manufacturing problems early in the car's life.
Pretty much. And once that period, that 3 years or 36K miles, whatever it is up, the car maker's obligation for those kinds of defect repairs usually ends.
And that's where this whole extended warranty idea comes into play.
Right, but here's that crucial distinction the sources emphasize.
The name itself is a bit misleading.
It really is. What most people call an extended warranty isn't technically a warranty in the legal sense. It's a vehicle service contract, a VSC.
Okay, VSC. Let's stick with that.
Good idea.
Yeah.
So it's not usually an extension from the car maker themselves unless you're buying their specific branded VSC, often sold right at the dealership.
Which can be an option.
It can be. But most of the ones being pushed, especially by third parties, are these optional contracts you buy separately.
You pay extra for it. It's not included.
Correct. Often thousands of dollars extra. You might finance it with your car loan, pay it all up front, or pay monthly.
And what does it promise?
It's a promise from the company selling the VSC, the dealership, or a third-party provider, to cover the cost of repairing or replacing certain specific parts.
Certain parts. Keyword.
Very key. Certain mechanical or electrical components after your original manufacturer's warranty runs out.
So it's less about the car's initial quality, more like buying a safety net from someone else for specific potential problems later on.
That's a really good way to put it. That's the core concept.
Okay. And the sources mention a couple of other related things just to keep straight.
Yeah, just briefly. You might hear about service contracts or prepaid maintenance plans. Dealerships often sell these.
What are those?
These do cover routine stuff like your oil changes, inspections, maybe tire rotations for a set time, but they don't cover unexpected breakdowns.
Ah, okay. just the scheduled maintenance.
Right. And sometimes they make you get all the service done only at their dealership, which isn't always convenient.
Right. And the other one?
Mechanical breakdown insurance, or MBI.
Yeah.
That's different again. It's actually regulated like insurance, like your car insurance or home insurance.
So state insurance laws apply.
Usually, yes.
Yeah.
Which might mean clearer rules, maybe more consumer protection sometimes. But MBI is often only available for newer cars with lower mileage.
Gotcha. Stricter eligibility, maybe?
Potentially, yeah. VSCs can often be bought for older cars, too, which MBI might not cover.
Okay, so MBI is its own thing. But the VSC, the Vehicle Service Contract, that's the main product we're talking about today. The one behind those annoying calls.
Exactly. And the reason people even think about buying these VSCs comes down to a very real fear, doesn't it?
Yeah, the potential cost of repairs. That's the pain point.
It's the uncertainty, I think. You might see an article saying the average annual repair cost is, maybe $650? Maybe closer to $920 or more now with inflation?
Yeah, somewhere around there.
But that average includes lots of small things, right? Minor fixes. What people really worry about is the big one. The catastrophic failure.
The engine, the transmission.
Exactly. Or even those complex computer modules, the ECUs. The sources talk about potential costs there, $3,000, $4,000.
Easily $5,000 or more, depending on the car.
Right. It can get incredibly expensive really fast.
And that fear gets magnified because, let's be honest, a lot of people just don't have that kind of cash lying around.
That's a huge factor. One source mentioned a stat, something like 41% of Americans couldn't easily cover an unexpected $1,000 bill without borrowing or going into debt.
Wow, 41%. So imagine facing a $4,000 transmission repair when you don't even have $1,000 saved up.
It's a massive source of stress.
Yeah.
Real financial risk for millions of drivers out there.
Okay, so that really sets up the core decision then. You've got this risk of potentially huge repair bills. Do you buy a VSC to hand that risk off to someone else?
Right, transfer the risk.
Or do you decide to keep that risk yourself and try to manage it by saving up?
Exactly. The sources basically frame it as choosing between buying the contract versus, self-insuring, building your own repair fund.
And there are solid arguments presented for both sides in the material we looked at.
Absolutely. Understanding both sides is key to making an informed choice.
Okay, let's start with the case for buying the VSC. What are the main upsides the sources highlight?
I think the biggest one, the one that comes up again and again, is peace of mind.
Just not having to worry about it.
Yeah. It's about easing that anxiety, that fear of getting hit with a massive, unexpected repair bill. Several sources point to this as the number one reason people buy them.
Like that reviewer quote about finding that extra peace of mind.
Exactly. For people who are just really risk averse or whose budgets absolutely cannot handle a multi-$1,000 surprise, that psychological benefit is tangible. It's real.
And kind of tied into that is managing your budget, right? Predictability.
Definitely. Instead of this unknown, potentially huge one-off cost popping up out of nowhere, you're paying a predictable amount, either upfront or more commonly in monthly installments.
What kind of monthly cost did the sources mention?
They cited averages ranging maybe $20 to $50 a month, depending on the plan and the car.
Okay, so for a lot of people, budgeting $20 or $50 a month feels much more manageable than suddenly needing, $3,000 or $4,000 cash.
Right. It smooths out that potential financial shock, makes it predictable.
It turns that big unknown into a smaller known regular cost.
Precisely. And the hope, the potential upside, is that it will cover those really big ticket failures.
The engine, the transmission, the really expensive stuff.
Yeah, the transfer case, those complex electronics. For parts that can literally cost thousands to replace, a VSC can offer significant protection. It could save you from those worst-case financial hits.
And it's not always just about the repair cost itself, is it? Many of these VSCs bundle in other perks.
That's a good point. The Reddit discussions and other sources definitely brought that up. Secondary benefits.
Like what kind of things?
Things that add value, even if you don't have a huge mechanical breakdown, like roadside assistance.
Flat tire, run out of gas.
Yeah, exactly. Towing reimbursement if your car needs to get to the shop.
Huh.
Rental car coverage while your car is being fixed.
Which can be super helpful.
Absolutely. Or even trip interruption coverage. Help with lodging and meals if you break down far from home. The Endurance example mentioned had 247 roadside assistance included.
So practical stuff you might otherwise pay extra for.
Right. Perks you don't get if you're just putting money in a savings account.
And then there's the convenience factor, at least ideally.
Yeah, when it works smoothly. The idea is your mechanic finds the problem, they call the VSE company, get approval.
Authorization.
Right, authorization. And then the VSE provider pays the shop directly for the covered repairs. You just pay your deductible.
So it simplifies the payment part for the covered work?
That's the goal, yeah. Makes it less hassle for you at the point of repair.
Okay. And one last point for the pros side, transferability.
Some sources mention that. Some VSCs can be transferred to the next owner if you sell your car privately.
How's that help?
Well, the thinking is it might make your car a bit more appealing to a buyer. Knowing there's still coverage left could, potentially, let you ask for a slightly higher price. Maybe.
Interesting. Okay, so summarizing the for side. Peace of mind, budget predictability, covers potentially huge repairs, those extra perks like roadside assistance, convenience in the repair process, and maybe some resale value boost.
That captures the main arguments pretty well.
But the sources also laid out a really strong case against buying them, or at least for seriously weighing that self-insuring option.
Oh, yeah. And this is where you really need to understand how the VSC business works.
The fundamental argument against seems to boil down to cost versus benefit, right? For the average person, the average car.
Exactly. The sources are pretty direct about it. VSCs are a big revenue stream for the companies selling them. Dealerships, third-party providers, they make money on these.
It's a profit center.
It absolutely is. It's a business designed to make money. That Reddit commenter comparing it to gambling kind of hit the nail on the head.
House.
You're betting you'll need expensive repairs covered by the contract. The VSC company is betting you won't need repairs, or at least not enough repairs to cost more than what you paid for the contract.
And statistically.
Statistically, the odds usually favor the company. They price the contracts based on actuarial data about failure rates for specific makes and models, plus a profit margin.
Let's look at the numbers the sources cited. Average annual cost for a comprehensive, bumper-to-bumper VSC.
Around $1,000 a year was mentioned as typical.
Okay, $1,000 a year. Now compare that to the average annual cost for both maintenance and repairs combined for a typical car.
Right. The RepairPal data suggested around $652 back in 2019. Adjust that for inflation, maybe it's over $920 in $25, something like that.
So wait, the cost of just the top-tier VSC, that $1,000 a year, is often already more than the average person spends in a year on all their maintenance and repairs put together.
That's what the data suggests, on average. And that's the core of the gamble argument against it. You're paying a premium, often a significant one, just to transfer the risk. And on average, that premium is likely higher than the actual expected cost of the risk itself over the long run for a typical vehicle.
So the companies are profitable because overall they collect way more in VSC payments than they pay out in claims.
That's the business model, yes. For every person whose VSC saved them thousands, there are likely many others whose VSC costs more than the repairs they received, or who never even filed a significant claim.
Okay, that cost-benefit analysis is huge, but then there's maybe the biggest source of complaints and frustration.
The exclusions, the fine print.
This seems absolutely critical based on the sources.
It's where so many people get tripped up. They buy a VSC, maybe they're told it's bumper to bumper, thinking everything is covered after the factory warranty ends.
But it's not.
Far from it. The reality is much more limited. The sources list a ton of common exclusions that can easily lead to a claim being denied.
Okay, let's walk through some of the big ones from the material. First up, pre-existing conditions.
Right. If a problem, or even signs of a potential problem, existed before you bought the VSC, or before its waiting period ends, forget it. They won't cover it.
Especially important if you're buying for an older car that might already have some issues brewing.
Absolutely. They're not going to pay to fix something that was already broken when you signed up. And related to that,
The waiting period.
yeah, very common. Usually something like 30 days and maybe 1,000 miles driven after you buy the contract.
So you can't just buy it when you hear a funny noise starting.
Exactly. Any repairs needed during that initial waiting period, generally excluded. It prevents people from gaming the system.
Okay. What else is almost always excluded?
Routine maintenance. We mentioned this for the factory warranty. It applies here too. Oil changes, filters, tire rotations of VSC, even the best one, does not cover scheduled maintenance.
That's still on you. And normal wear and tear items?
Also excluded. Parts that are designed to wear out through normal driving. Brake pads, rotors, clutch discs if you have a manual, tires, belts, hoses. Unless a hose fails suddenly in a way that's covered elsewhere, maybe. But normal wear, no.
Bulbs, wiper blades.
All that stuff. Universally excluded.
What about damage? Like if you hit a pothole or something?
Generally, damage from external events or misuse is completely excluded. If the failure is caused by an accident, hitting debris, driving through water,
Flood damage.
yeah, flood, fire, or misuse like, racing your minivan or taking your sedan off-roading, that's not covered.
Abuse too, right? Like ignoring warning lights.
Big one. If you keep driving with a known problem, like an overheating engine, and cause more damage, they can deny the claim based on abuse or neglect.
And neglect ties into maintenance, doesn't it? This seemed like a major reason for denied claim.
Huge. Failure to follow the manufacturer's recommended maintenance schedule. You have to do it, and you have to keep records.
Proof, receipts.
Exactly. If your engine blows up and you can't prove you got the oil changed on schedule according to the owner's manual, the VSE provider can, and very likely will, deny the claim. They'll argue the failure was due to neglect, not a covered mechanical defect.
Wow. So buying a VSC basically commits you to being super diligent about maintenance and record keeping.
It absolutely does. It's part of the contract terms you agree to.
What about modifying your car? People love to customize.
Another minefield. Aftermarket modifications are a frequent reason for claims getting denied.
How so?
If you modify your vehicle, put on different wheels, change the suspension, tune the engine, any failure that the VSC provider can argue was caused by or related to that modification might not be covered.
Even if the failed part wasn't the modified part itself.
Potentially, yes. If the modification put extra stress on other components, leading to their failure, that source example of the Mopar claims adjuster.
The lift kits on Jeeps.
Yeah. They deny claims for related suspension or drivetrain parts failing, arguing the lift kit, the modification, was the root cause, not a defect in the covered component itself.
That really shows how tricky it can get. A modification you think is unrelated could void coverage for something else.
It absolutely can. You need to be very careful.
What are some other common exclusions?
Using the vehicle for commercial purposes like ride-sharing, delivery driving, that often voids coverage.
So Uber drivers need to be careful.
Definitely check the contract.
Yeah.
Also, cars with salvage titles or titles branded for flood or fire damage are usually excluded. Damage from environmental things not covered by your regular auto insurance, and doing repairs yourself, or using a mechanic who isn't properly certified or maybe not approved by the VSC provider.
Wow. Okay. Lots of ways a claim can be denied.
And maybe the most crucial point about exclusions, the sources really hammered this home. Even the best bumper-to-bumper or platinum plans aren't truly everything is covered.
They're called exclusionary contracts for a reason.
Exactly. That means they cover everything except a specific list of things. And that list can be long and detailed.
So you must read that list of exclusions in the contract.
Absolutely. That's where the truth lies. According to those claims adjusters cited, the vast majority of denied claims happen because the failed part, or the reason it failed, was right there on the exclusion list, or because the owner didn't meet the terms, like the maintenance rules.
So the fine print isn't just legal jargon, it's the actual map of what you bought.
Precisely. Skipping it is just asking for trouble and disappointment down the road.
Okay, beyond the coverage itself, another big negative that came up was the reputation of some parts of the VSC industry.
Yeah, that's definitely a factor. It's unfortunately known for some pretty aggressive sales tactics.
Those phone calls again.
Right. High pressure, sometimes misleading claims, try to scare you into buying right now. That pressure itself should be a warning sign.
And even if the sale goes okay, the actual experience of filing a claim can be problematic.
It can vary hugely. Some providers, especially some of the third-party ones, have reputations for making the claims process really difficult, putting up roadblocks, delaying decisions, trying to deny claims based on, let's say, creative interpretations of the exclusions.
Compared to maybe a manufacturer-backed VSC?
Manufacturer plans might be smoother, potentially using genuine parts and their own certified techs, but they often cost significantly more, and you might be restricted to getting service only at their dealerships.
Trade-offs everywhere. And related to that difficulty, people sometimes struggle just to cancel the VSC, even though they're supposed to be able to.
Yeah, that came up too. You're usually allowed to cancel, often getting a prorated refund based on time or mileage used, especially early on. But some consumers report hitting major hurdles.
Like that extreme example from Consumer Affairs.
Yeah, the reviewer who said they had to cancel their credit card to stop the charges, and the company still kept billing them and reported them negatively. That sounds like a nightmare. Getting a refund or just stopping the payments can be a real battle with some of the less reputable outfits.
Okay, now let's flip back to the self-insuring idea for a second. We know the pro is potentially saving money if you don't have major repairs. What are the cons of that approach?
Well, the big one is it requires discipline, real financial discipline,
You have to actually save the money.
consistently. You need to set money aside month after month into a dedicated account just for car repairs. And maybe the harder part,
Not spending it on something else.
exactly, resisting the temptation to dip into that fund for a vacation or home improvements or anything other than car repairs, it takes conscious, ongoing effort.
And there's the risk that you just won't have saved enough when something does break, especially early on.
That's the inherent gamble of self-insuring. If you start saving today, but your transmission dies 6 months from now, you probably won't have anywhere near enough saved up to cover that multi-thousand-dollar bill.
So you're back to facing the financial hardship you might have avoided with a VSC. You carry all the risk yourself.
Correct. You bear the full brunt if a big repair hits before your fund is built up.
Plus, you miss out on those extra perks that come with many VSCs.
Right. No bundled roadside assistance, no towing coverage, no rental car reimbursement included with your savings account. You'd have to pay for those services separately if you needed them.
Although, maybe a small point, some credit cards offer a bit of extended protection.
Yeah, some do. It's usually limited, maybe doubling the manufacturer's warranty up to a year on purchases made with the card. It might cover some things, but it's definitely not comprehensive vehicle breakdown coverage like a VSC aims to be. A nice little perk if you have it, but not a full substitute.
Okay, so we've got the landscape, the terms, the general pros and cons. Now, the big question. How does someone listening take all this and apply it to their specific car, their specific situation?
Because the sources make it crystal clear, right? There's no single right answer. It's totally dependent on individual factors.
This is really the crux of it. It's not about VSCs being good or bad universally. It's about whether a specific VSC makes sense for you with your car right now.
And several key factors really influence that decision. They all kind of interact.
First one seems obvious. The car itself. Age and mileage must be huge.
Absolutely. They're massive factors. It's kind of a catch-22, though.
How so?
Well, older cars with higher mileage, they're statistically much more likely to need repairs just from wear and tear. So the potential value of a VSC seems higher, right? Because you're more likely to need it.
Makes sense.
But the VSC company knows this too. So the price of that VSC for an older, high-mileage car, it's going to be way more expensive than for a newer one.
And maybe have more restrictions?
Could be. Stricter terms, lower coverage limits, maybe shorter contract lengths. They're pricing in that higher risk.
And the specific make and model matters too. Its reliability reputation.
Definitely. This is where looking at data like from Consumer Reports really helps. The sources mentioned brands known for strong reliability. Subaru, Lexus, Toyota, Honda, Acura, Mazda, Kia, Hyundai, even BMW and Audi in some recent reports.
So if you have one of those,
statistically, you're less likely to face a major, unexpected mechanical failure. Which means, on average, a VSC is less likely to pay for itself over the long haul.
but any car can break.
Exactly. Reliability is about averages and probabilities. Even the most reliable car can have a freak expensive issue. Owning a reliable car just lowers the odds. It doesn't eliminate the risk entirely.
And the flip side, if you have a car known for being less reliable.
A VSC might seem more tempting, right? Because the risk of needing repairs feels higher. But again, the VSC cost for that less reliable model will likely be higher too. And you need to be extra careful reading the exclusions to make sure known common problems for that model aren't specifically excluded.
The type of car also seems to play a role. Luxury cars, EVs, hybrids.
Big differences there. Luxury cars often have really complex systems, fancy electronics, parts that are just way more expensive to fix than on a basic sedan.
So the potential repair cost is higher, making a VSC look more appealing?
Potentially, yes.
Right.
But the VSC itself will also cost a lot more for that luxury car.
And EVs or hybrids, they're different beasts.
They are. Less routine maintenance on some things, maybe fewer moving parts in the drivetrain. But the really expensive stuff, the high voltage battery pack, the inverter, the onboard charger, if those fail outside the manufacturer's specific warranty for them,
Costs can be astronomical. $10,000, $15,000, easy.
or more. So VSCs targeted for EVs and hybrids exist. But the sources warn to be really careful about the battery coverage specifically. It might be limited, have lots of conditions, or they might deny claims if the battery is just degraded normally over time rather than suddenly failing catastrophically.
So read that EV-specific fine print very closely.
Extra closely, yes.
Okay, so the car's profile is number one. What's next? Your own financial situation.
This might be the most personal factor of all. It boils down to, can you actually afford a major repair bill if it hit tomorrow?
Like, could you comfortably write a check for $3,000, $5,000 without it wrecking your finances?
Exactly. If a bill that size would wipe out your savings, force you into high-interest debt, or cause serious financial hardship and stress, then that peace of mind and budget smoothing from a VSC might genuinely be worth the cost to you, even if, statistically, you might end up paying more in premiums than you get back in claims.
It acts like insurance against that specific financial shock you can't handle.
Right. It's buying protection against a level of financial risk you're not comfortable bearing yourself.
Which means having a solid emergency fund already makes self-insuring much more feasible.
Absolutely key. If you've got a healthy emergency fund, 3-6 months of expenses saved up, easily enough to cover a $5,000 car repair and still be okay, then the math changes. Self-insuring by building a separate repair fund becomes a much more logical, potentially cheaper option over the long term. You could absorb the risk yourself.
And even if you do get a VSC, you still need some savings, right, for deductible.
Definitely. And for anything the VSC doesn't cover, those exclusions, maintenance, wear and tear items, an emergency fund is crucial either way.
Okay, car specifics, personal finances. What about how long you plan to keep the car?
Yeah, your ownership horizon. This really impacts the value proposition.
How so?
If you're someone who trades in cars pretty frequently, say every 2, 3, maybe 4 years, you might sell the car before the original factory warranty even expires, or shortly after.
So you barely even use the VSC coverage you paid for.
Exactly. Buying a long-term VSC in that scenario is likely just throwing money away. You won't own the car during the period when the VSC is most likely to be needed.
But if you're planning to keep it long-term, drive it into the ground.
Then the picture changes. If you plan to keep the car for 7, 10, 12 years, accumulating high mileage, well past the factory warranty, the probability of needing significant repairs goes way up.
Yeah.
That longer ownership period makes a VSC potentially more valuable as you're covering a much longer window of risk.
Makes sense. Okay, and then maybe the most direct factor, the actual VSC contract itself that's being offered. The specifics matter hugely.
Immensely. Because they're not all the same. Not even close. Even from the same company, you'll see different levels of coverage.
The tiers, right. Basic, mid-level, comprehensive.
Usually something like that. Basic or powertrain typically covers just the core expensive stuff. Engine, transmission, drivetrain.
The things most likely to be budget busters.
Right. Mid-level might add things like air conditioning, some electrical components, the cooling system, and then comprehensive or bumper to bumper.
Which isn't really bumper to bumper.
Correct. Its exclusionary covers most mechanical and electrical parts, except for that specific list of exclusions we talked about.
So you need to figure out what level of coverage you actually want or need.
And weigh the cost.
Yeah.
Interestingly, some sources suggested that while the comprehensive plans cost the most upfront,
They might be the best relative value.
potentially, yeah, the idea is the cost per part covered might actually be lower in a comprehensive plan compared to paying almost as much for a very limited powertrain-only plan.
Like that Chevy Equinox example. The top plan wasn't dramatically more expensive per month than the lower tiers, but covered way more stuff.
Exactly. It's something to consider when comparing quotes. Don't just look at the price. Look at what you're actually getting covered for that price.
And the overall cost of the VSC itself is obviously huge. We know it varies wildly.
Hugely. Based on the car's age, mileage, the coverage level you pick, the deductible, the specific vehicle, and the provider selling it. Monthly costs might sound low, $20, $50 maybe, but the total contract cost
Can be thousands, $1,500 on the low end, maybe over $10,000 for a long, comprehensive plan on a complex or older car.
easily. And remember that source pointing out that quotes for the exact same car and exact same coverage level could differ by $1,500 between providers.
That's insane. It just screams, shop around.
You absolutely have to get multiple quotes. Don't take the first offer.
And the deductible plays into the cost, too.
Right. That's the amount you pay out of pocket for each covered repair. Higher deductible usually means a lower VSC premium, upfront or monthly, but you pay more per incident. Lower deductible means a higher premium, but less out of pocket when something breaks.
It's a trade-off. How much risk do you want to retain per incident versus paying more upfront?
Exactly. It depends on your cash flow and risk preference at the time of repair.
Okay, so given all these moving parts, all the potential traps, if someone decides a VSC might be worth exploring for their situation, what are the practical steps the sources recommend taking? How do you navigate this minefield?
Number one, especially if you're at the dealership buying a car, don't feel pressured to buy the VSC right then and there.
Resist the hard sell in the finance office.
Absolutely.
Yeah.
Dealerships make good money on VSCs, so they'll often push them hard. but you almost always have time. For a new car, you can usually wait until your factory warranty is getting close to expiring, maybe near the 3-year or 36,000-mile mark.
Why wait?
2 reasons. 1, you avoid paying for coverage that overlaps with the free factory warranty you already have. 2, your car is still relatively new and low mileage then, so you might qualify for better rates than if you wait until it's much older.
Okay, so don't rush. Second tip.
Research the VSC provider itself thoroughly.
Look beyond just the price.
Way beyond. Look for companies with a solid track record, been around a while, financially stable. You need them to be there to pay claims years from now.
Check reviews.
Definitely. But focus on reviews about the claims process. Did they pay claims fairly and promptly? Or do they make it a huge hassle? Find complaints about claim denials.
Maybe ask a trusted mechanic.
Excellent idea. Independent mechanics deal with various VSC companies all the time when getting repairs authorized. They often have strong opinions about which ones are easy to work with and which ones are nightmares. Their insight can be gold.
Good tip. Okay, third step.
Compare multiple quotes. We can't say this enough.
Because prices vary so much.
Wildly. Get quotes from several different providers, maybe the manufacturer's option, and a couple of reputable third-party companies. Make sure you're comparing quotes for the exact same coverage level, same deductible, same contract length on your specific car. VIN number is usually needed.
Apples to apple.
Exactly. And look at payment options upfront, lump sum, month payments. Having competing quotes also gives you leverage to potentially negotiate the price down.
Okay. And fourth, maybe the most critical step of all.
Demand to see and then actually read the sample contract or the actual contract before you sign or pay anything.
Read the fine print, all of it.
Every single word. This is non-negotiable. This document tells you exactly what you are buying and, more importantly, what you are not buying.
What should you look for specifically?
Understand the deductible. Is it per visit or per repair item? Know the waiting period before coverage kicks in. Understand the maintenance requirements. What schedule must you follow? What proof do you need? And most importantly, read that list of exclusions, every single part, every situation that is not covered.
Get the cancellation policy in writing too.
Absolutely. How do you cancel? What's the refund policy? Usually prorated. Are there cancellation fees? Know this up front. Remember, the sources said most denied claims come directly from that exclusions list or from the owner not meeting the contract terms. Reading the contract is your absolute best protection.
If you don't read it, you're flying blind on a potentially expensive agreement.
Completely. It's just essential due diligence.
Okay. And finally, just be super careful about scams.
Goes back to those calls and emails. The VSC market unfortunately attracts shady operators. Be incredibly wary of any unsolicited contact. High-pressure tactics are a huge red flag.
Don't give out personal info or payment details.
Not unless you initiated the contact with the company you researched and decided was legitimate. Look for companies with clear contact info, physical addresses, easy-to-find cancellation policies. Verify their licensing if possible in your state. Just be skeptical of unsolicited offers.
Okay. So after going through all these sources, all these details, it's really clear that just slapping a label on extended warranties, smart protection, or expensive gamble doesn't really work, does it?
It's way too simple. The reality is so much more nuanced than that.
There really isn't a universal yes or no answer that fits everyone or every car.
Not at all. Whether a VSC is worth it is completely personal. It hinges entirely on your specific situation.
It's not about the product itself being inherently good or bad.
Exactly. It's about how well a particular VSC contract, with its specific cost, its specific coverage, its specific exclusions, aligns with your needs, your car's characteristics, your financial reality, your tolerance for risk, and how long you plan to keep the vehicle.
So the key takeaway is you have to do the work.
Yeah.
Step back from the sales pitch, do your research, get those quotes, compare them carefully.
And above all, read and understand that contract before you commit a dime.
It's about making an informed choice based on analysis, not just reacting to fear or pressure. It really comes down to deciding how you want to manage the financial risk that comes with owning a car after the factory warranty is gone.
That's the bottom line.
Which leaves us with kind of a final thought to chew on, doesn't it?
Yeah, thinking about risk. We readily buy insurance for things that are statistically pretty low probability, but would be financially devastating if they happened. Our house burning down, a major car accident, a critical illness.
Risks we mostly can't afford to bear ourselves.
Right. But an extended car warranty, a VSC, is essentially asking you to pay a premium, often a significant one, to insure against something that is statistically speaking, much more likely to happen eventually over the life of a car. A mechanical breakdown needing a non-routine, possibly expensive repair.
So how does that difference in probability, low chance of catastrophe versus high chance of eventual repair, change how we think about paying to transfer that risk?
And maybe more personally for you listening, how much is it worth? What's the dollar value you place on simply not having to worry about that potential multi-thousand-dollar repair bill showing up unexpectedly? Is that peace of mind worth the known cost of the VSC premium?
It's really a mix of financial planning, managing risk, and just your personal comfort level with uncertainty, isn't it?
That's it, exactly.
Definitely some things to think about. Thanks for joining us on this deep dive today. Hopefully these insights help you weigh the options for your own situation.
Take these points, do your homework, and make the call that feels right for you.